Hi, in this video we're going to talk about expanding into the European marketplace if you already have a US account, for example. So basically, if you look at Amazon's sales globally of third-party products and FBA, the two biggest markets are one, the US and North America, and the second is Europe. I mean, you can add on Japan and Australia, but it's just additional layers of complexity, language for Japan, rules and regulations and taxes. So those are only really worth expanding once you've maxed out in the US and Europe. And usually, instead of adding Japan, which might increase your sales by 5% globally, it's better just to add a second product to those two markets and you can double your sales, right? It doesn't necessarily make sense to expand to every single Amazon country. It might just be better to double how many products you have and thereby increase sales. So there's different ways to expand and achieve the same goal. So if you're going to expand to Europe, unless you speak fluent French, Italian, or German, you really want to just focus on using the UK as your base market. Why? Because it's English. Seller Central is all going to be in English. It's going to be the same. The customer support is all going to be in English. It's just a lot simpler to get started. And if you then want to expand into selling into the rest of European countries, you can do that. There's different programs through Amazon to do that, and we're going to run through those a little later in this video as well. So you have English, it's Seller Central. What considerations do you need? So you have a choice. You can either use your existing American-based company, if that's where you're based. If you're overseas or offshore, it's a little bit more complicated, and you might need to check for your specific situation. So you have a choice to use your American company or register a new UK company. If you register a new UK company, you don't need to worry about VAT until you reach the threshold for VAT. That's value-added tax. It's very similar to sales tax. And we'll go a little bit more in detail into the VAT in a moment. So if you decide to go with your existing US company or US LLC, if you have one, you're going to need to register for the VAT, the value-added tax, first before you can start selling in that market and set up a Seller Central account. If you go with a UK company, you can start that process a little faster. So basically, the rest of the setup in terms of getting an account set up in the UK to sell in Europe or the UK is very similar to how you went through the process for setting up in Amazon US, and that's basically you're going to need a credit card to pay the Amazon monthly fee for setting up the account. Very similar to US, I think it's around $30-40 a month at the moment. You're going to need a bank to receive payments to, phone, business identity and address, etc. Exactly the same way you set up the US account. Everything else is the same. There's a few differences that you need to be aware of, and that is to import into Europe or the UK, you will need something called an EORI number, and that's basically a way of tracking your shipments in, and you're going to need to pay VAT, value-added tax, on import for a product. So that's something to be aware of as well. Let's dive into EU VAT a little more. So yes, you're paying on import, and then unlike sales tax, which is added on the top of the price of the product, let's say the product sells for $10, then sales tax is added, let's say it's 3%, so then on top of that would be 30 cents for sales tax. VAT is from the total price it's sold for. So if it sells for £120 and the VAT is 20%, then £20 of that 120 will go to pay VAT, and 100 goes to you for the product and the sale. So it is quite a chunk of the listing price. And that's something you need to look at when you're doing your numbers as to whether it's even worth selling in the UK European market for your particular existing products, or you want to change products. But it's not added on top, it's counted as the listing price. And the other thing to note is sales tax is much lower. VAT can range from 7 to 27%. So it is a huge chunk of money off the listing price that goes simply for tax. Governments are making huge profits. I mean, they're getting basically 20% of every product sold with no investment and no work and no money done. It's amazing. And so basically, you only need to do VAT registration, tax registration in countries where your inventory is held. So that's why we recommend just sticking to one market at the start. UK for English is simplest, and that way you're starting simple. You've got one location, you've done the VAT, you're set up in that market, then you can look to expand. Because to expand right across Europe, if you do the PanEuropean Program, for example, you need to do VAT registration in every single country. You need to translate your listing for every single country. You need to redo a product launch in every single country. It's expensive and time consuming. It can take months to get all of those VAT registrations, and if you don't have it, you can get your Amazon account shut down in the whole of Europe if you try to expand to Europe without having those in place. So where you have inventory, you need to register for taxes. It's that simple. And the best way is just to start with one location, and we're going to run through the options quickly here. Okay, so what Amazon are currently offering is a Pan-European program. And basically, they'll distribute your products around the main European markets based on what they expect. They call the anticipated demand. The problem with this is you need to register for tax in every single one of these countries before you can apply for this program. Avoid it at the start. At the beginning, it's much easier to do the European Fulfillment Network, which is basically you have the products in the UK or one market, and Amazon will deliver from that market to all the other countries when customers order. They can still order from Europe, Germany, France, Spain, Italy, etc. But all your products in one place, your taxes are simplified. The difference is fees here will be a little bit higher than the fees here, right? But when you're just starting out and just expanding, that's fine. So your profit's a little bit less. It doesn't matter. If you're then making good sales and good profits doing this way, you can change to this and take back that extra profit. But if you're not making great sales, then doing all of this up front of registering for every country is a lot of work, right? So it's much easier to step by step. First UK, then go into the European Fulfillment Network from the UK, and then later on, once you're selling well across Europe, you can expand to do the tax in each country, because then you're going to need to file locally, etc. It's just easier to go step by step to progress. The other option is multi-country inventory, but again, if you hold inventory in another country, you need to register for tax purposes, so keep it simple. Just focus on one market, one place to have your inventory. Use the European Fulfillment Network to sell Europe-wide. And then when the numbers make sense and you have enough revenue there to support all of the costs of getting an accountant, tax, translation, expanding further, then use the profits to do that and expand further and grow your business. Just take it a step at a time. There's no need to rush. And in terms of VAT, once you're registered, there's many services to automate the collection of that and the payment of that and the reporting of that. It isn't as complicated as it seems if you keep it to a minimum, which is keeping it to one market to begin with. As soon as you add multiple markets, you're just adding so much complexity in terms of languages, different tax rules, accounting for all those different countries. So VAT is not really that complicated if you're keeping it simple. Thank you.